Anyway.
All right, moving on to the other T, TCS. So just before that, TCS came out with the numbers. So on one hand, after the 20% correction in share prices like TCS, Infosys, even the Nifty IT, valuations now getting to long-term average. In the case of Infi and TCS, valuations have now dipped below the 10-year average. So that's on one side. But on the other hand is that there is no growth. You know, Jefferies is now anticipating TCS to grow its top line by 2% from FY25 to FY27 and its EPS by 5%. We're talking about low single-digit revenue growth from FY25 to FY27. So, you know, that's the picture. Valuations may now be looking cheap relatively, but then there is no growth. So what should you be paying for? Also, perhaps investors will wait and watch for Infosys. That's the next catalyst. Now, Infi comes out with its numbers on 17. Now, you know, before it became a tamasha crisis, there were expectations in terms of guidance. 2 to 4%, 1 to 4%, 2 to 5% at best case for Infosys in terms of an annual guidance. But now the street is feared that will they guide at all, given the uncertainty? And if they don't guide, that means for 3 months or more, you will have no idea what IT companies are growing at. So that is an added uncertainty. And we just quickly pull up the earnings calendar. Next week, Wipro, Infosys, Bastec. And the following week, HCL Tech, LTI, Mindtree, Cyient, LTTS, Emphasis, Persistent, Tech Mahindra, basically the rest of the IT pack. And some key lines from TCS's interview this time. Well, clients aren't panicking, no major deal cancellation or ramped out, but they are seeing some tactical, there are some delays in decision making or some tactical ramp downs, as they called. They're pausing on wage hikes, so that's a bit disappointing for all employees as well. They will decide, they'll take a call when to give wage revisions or increments this year. But they continue to hold on that FY26 will be better than FY25 if you strip out the BSNL, majorly for their international or their developed markets. But